Y Limited decides to absorb X Limited. The draft balance sheet of X Limited is as follows. 3,000 equity shares are there of rupees 100 each, fully paid up. Preference shares are there. Net assets and profit and loss account. So it seems to be a loss-making company. Y Limited agrees to take over the net assets of X Limited. Net assets of X. So X is the selling company and Y Limited is turning out to be the purchasing company. They are saying an equity share in X Limited for purposes of absorption is valued at the rate rupees 70. Y Limited agrees to pay rupees 60,000 in cash for payment to preference shareholders. Now, there cannot be anything more easier than this. When it comes to preference shares, if you see in the balance sheet, preference shares are 60,000 and we will settle them in cash. So we are not going to give preference shareholders of the selling company preference shares of our purchasing company. We will just pay them cash of 60,000 and the matter will end. Then they are saying equity shares will be issued at a value of rupees 120 each. A full stop should be there over here, right? This should be equity shares will be issued at a value of 120 each. Calculate the purchase consideration to be paid by Y Limited and how it will be discharged. So what they are really saying is that the value of one share is 70 rupees. So if you see in the balance sheet, there are 3,000 equity shares. So 3,000 equity shares are there. I will value that at 70 rupees. That means we are going to give the equity shareholder something worth 2,10,000. And then I will pay 60,000 rupees to the preference shareholders. The sum total of this is 2,70,000. To be honest, this is your purchase consideration. We have to simply show it in a proper format. Computation of purchase consideration. We will first show what we are paying to the equity shareholders. $3,000 shares are there, which we will value at 70. So that is turning out to be 2,10,000. And we are issuing our shares at 120 rupees. So I will divide this by 120. That means we are giving them 1750 shares. So we say 1750 equity shares. These are equity shares of the purchasing company, which is Y Limited. At the rate rupees 120. 2,10,000. Now it is time to settle the preference shareholder. We are paying them cash, isn't it? 60,000. The total of this 2,70,000. That's your purchase consideration. If you see the question, they are saying calculate purchase consideration, we have done that, and how it will be discharged. See, this statement is also showing how it was going to be discharged, isn't it? You are supposed to pay 2,10,000 to the equity shareholders. Tell me, how will it be discharged? It will be discharged by issuing 1750 equity shares at 120 rupees. We will pay 60,000 rupees to the preference shareholders. How will it be discharged? It will be discharged in cash. So both the questions are being answered by preparing this single statement.